Welcome to Sathish Speaks channel. Markets are down by 1.54% today. Sensex has lost 889 points and closed with 57,011. Nifty has lost its crucial support of 17,000 and closed with 16,985. Even the mid and small caps are also the worst performing, which lost 2.6 and 2.54% respectively today. The worst hits are IndusInd Bank, Tata Motors, HUL, Kotak Mahindra Bank, and the only sector which has closed in green positive, which is IT sector. HCL Tech, Wipro, Infosys are gainers today. If you go back and check my videos on 23rd September and 22nd November, I have given clear recommendation for the investors to book profits while they are made so much in the bull run. In both the videos, I have given recommendation to book profit. If you are missed to book profits, you don't have to panic now, because in this video, I'm going to explain to you why the markets are down, number one, what an investors can do at this juncture, and number three, can you use this particular fall in order to negative average or to buy more equity participation? Your all these questions will get answers in this video. I am Sathish, financial consultant and author of this book called Untold Wealth Secrets. If you have any recommendation, clarification, advisory on equity, PMS or mutual funds, my WhatsApp number there in the description, connect with me. And if you are watching this video, please to click the like button now, because the chances of this video reaching multiple people are very high when you click the like button. So let me start my video with a disclaimer. This is my personal opinion and research. If you want to invest in equity or mutual fund, number one, please do your own research or consult your financial consultant. Okay, why the markets are down? That's number one reason is the policy tightening across the globe. Bank of England are surprised with they have increased their interest rates very recently. And it has never happened post pandemic. After April 2020, this is the first time that they are increasing the interest rates. And globally, the inflation is also up. So, policy tightening is the number one reason. And the second reason is that the renewed worry of the COVID and the Omicron variants. So that is also rising globally. So these are the two factors are adding the selling pressure to the market. Most of the FIAs are the sellers, net sellers today. If you are a long-term investor in equity market, and if your money being invested for 3 and 5 years and above, you need not worry about these negative sentiments or the recent fall. I was reading a report from Goldman Sachs. They are stating that India will be a 5 trillion economy. Today it's a 3 trillion economy and it's going to be a 5 trillion economy by 2024. 3 years from now, this is going to be the fastest growth of a trillion, adding 2 trillions to our GDP. And if you look at the recent GDP, which is September 2021, we have delivered 8.4 percentage of growth. And our tax collection are 27% higher than the pre-COVID levels. You take any sector, let it be service, let it be marketing, let it be consumption, we have exceeded the pre-COVID levels. So this is just a temporary fall. I would say that long-term investors need not worry or need not panic. I keep receiving messages and I keep getting comments in the that what should I do in this particular fall? Markets are down by 10 percentage from the 52-week high. But my message to all long-term investor in equity, those who have invested their surplus for next 3 to 5 years or 5 years and above, please do not worry about the markets. All the micro and macro fundamentals about Indian economy, Indian GDP is definitely good. Markets are giving, the companies are giving the good profits, earnings, and it will continue to go up and deliver good returns over a period of 3 to 5 years. But for traders, for those who are making investment for very short term, the short term is going to be volatile because of these two reasons. Number one, the policy tightening. We don't know that how many other countries gonna follow this particular suit, going to increase their interest rates. That is a worry. Number one. Number two, we don't know what kind of the statistics this particular COVID will come in next 15 days. So market movements will definitely based on the short-term movements will be based on these two factors. Okay. Now, what an investor can do at this point in time. Number one, readjust your asset allocation, bring most of your money into large and mid caps. Please, you restrict your participation in small, micro and penny stocks to a minimal level. I'm not saying that exit. I'm not saying that to vacate that space. That is definitely a very good space that can bring more returns to you, profitability to you, but restrict your participation. Number one. Number two, if you are a very moderate, if you are a conservative kind of customer, even this 1% of the volatility here and there makes you sweat in the equity market, sweat in the investment means balance advantage fund is the most convenient fund category in mutual fund investments. When I released my video on 23rd September, Sensex was at the kind of a 62,000. At that time, the balance advantage fund equity participation was only 40%. Automatically, the fund manager brought down the net equity participation, seeing the valuations are very high. But today, they have around 60 to 65% net equity participation in the same balance advantage fund. Even if you forgot to book profit, even if you do not actually take my recommendation, when you invest in these kind of funds, the fund manager automatically brings down his equity participation when the market goes up. So that is the beautiful category, but consult with your financial consultant or take a personalized opinion when you invest in balance advantage fund, whether the category is suitable or not. So that's number two. If you are a trader, please do not take a leverage position for next 15 days. It will kind of a very volatility positions. Many newses because this is actually a reactive market. If the policy tightening is happens, if the Fed is actually issuing any statements about inflation or interest rate hike, there can be a 2 or 3% more fall is possible. If you look at the Indian institutions, they have the domestic institution like mutual fund and life insurance, they have added more than 1 lakh crore from March 2021. That means that our retail flow is actually strong. Otherwise, the market could have gone down further. So, long term investor, my request to you is do not get panic, do not worry about it. Short term investor, please avoid leverage. That means that participating in futures and options for next 15 days. If you are doing it, do it with very judicious calls. So I'm Satish, financial consultant and author of this book called Untold Wealth Secrets. If you need any advisory recommendation on mutual fund, equity, or PMS, you can connect with me. My WhatsApp number is there in the description. And if you want to join my WhatsApp group, that description is also there in the description. Connect with me. I am sharing so much of personal finance, investment strategies in my WhatsApp group. And if you are watching this video, if you like this content, please click the like button now because the chances of this video reaching many people are very high. And most importantly, stay tuned, stay connected. This particular channel, I am going to share many more informative videos and information on personal finance and investments. I'll see you with another interesting video. See you. Bye bye.